Welcome back, guys. We are here again for another video, and in today's video I'm going to be going over framing your weekly narrative, and it will be covering the dollar index on a outlook for the start of the month and the start of the quarter, and it will be including a Euro USD trade breakdown. So to begin, we have the dollar index on a monthly chart, and this is now getting to the close of June's monthly candle before we have the open of July. So annotate this just to kind of see what you would say is the most obvious set for a draw on liquidity for July monthly candle to draw into. So now if you have what I have marked off, we did have a old bearish fair value gap that was traded through and utilized now as support. We had June's candle run May's low. And after we had the run of May's low, we had a bullish reaction, creating a stop hunt, staying inside of this monthly bearish fair value gap, which is now an inversion. So before we get into the open of July, what my anticipation would be that the low-hanging fruit objective point for July's liquidity pool objective point would be these relative equal highs here from the highs of May and April. And then eventually getting up to the highs resting at the 107.5 level. So now that we look at our monthly chart, we get a understanding of what order flow is, what does it look like the monthly candle is most likely going to draw to, and we have our understanding of order flow. So now that we have done the monthly, we're going to go to the weekly chart and understand what does the weekly look like, what can we frame here to then get to that monthly relative equal high draw. So from this point, obviously it's looking like we're in a clear market maker buy model, and now we're in a market maker buy model within that larger one on the monthly. So we have this old bullish fair value gap that we have reclaimed as previous week here closed above, and then last week as well closed above that fair value gap high. So what we could assume is that anything inside of this PD array will be utilized as support as well here. If you also look at the dollar index, we have this up close candle that we could utilize as some sort of breaker block or some sort of mitigation too for a PD array to form inside. We do have a fair value gap resting here for a potential for price to draw into if that was needed. But my idea going into the month of July and starting off this new weekly candle was price to retrace a little bit, potentially taking out previous weekly low or even getting into this gap or taking us into the consequent encroachment of this wick here, at least on our weekly chart. But now let's get into what price did to start off the week and on the Monday. So on our daily chart, this is what I had mapped off in the Discord, and this was in the middle of the day on Monday. We had dollar index draw lower to start off the open of the week, leaving a weekly flat top high. So I was anticipating a weekly open, low, high close on the dollar index to that relative equal high draw, since we do have NFP, which is a massive volatility injection, on that Friday, which typically sets the low or the high of the month. And I wanted that 106.6 level to be the low-hanging fruit objective point for the dollar index. And if that happens, if we could set that up, then that means that that would give us the inclination to understand that majors would go lower if dollar is going to go higher. So that would be me giving the anticipation for a weekly open high low close on Euro USD or GBPUSD. Now here is the weekly chart on both Euro USD and GBP USD on the right. Now again, like always, put your annotations on this chart. This is the open of the week with Monday's daily price action on, moving into Tuesday. So obviously at first glance when I'm looking at this, it's more clear to me to understand what is going on with Euro USD compared to GBP USD, but keep that in mind when you're making your annotations. So if you had everything mapped out properly, you would see one, obviously the most notable part, which is the SMT divergence. So on Euro USD, we have price coming into this weekly internal range liquidity pool, and we have the failure to take out that resting high that tagged the weekly key level on Euro compared to GBP. But we've been in more so of a consolidation with very small bodies on GBP compared to Euro USD, which has been having the expansion and the much cleaner moves. So if I'm moving forward, I would definitely be wanting to trade, even though this is the stronger asset in the key level. Given the fact that Euro has been a lot more active than GBP, I'm going to want to favor this pair over this pair for the trade. Now let's look at a daily chart just to see if we can get some more clarity. So looking at the daily chart here, these are just some areas in price that I'm paying attention to and that I'm looking at and how I'm trying to frame my execution and what I was doing to start off the week. So based off of what we're looking at on Euro and we're looking at on GBP, this looks like a very clear market maker sell model in my opinion, and we're just getting runs on buy stops in the opposing direction of our draw on liquidity, which is exactly what we want when we're trading market maker models. So we had this weekly internal gap. Now, if you look even closer and you kind of frame this in sort of like an AMD pattern, this is literally just accumulation, now manipulation into a higher time frame key level, and now we can get potential distribution lower. And like I said, at the open of the weekly candle for the dollar index, it was a flat top high. It was the same thing for Euro, with a flat top or with a flat bottom low. Now, this was my low-hanging fruit objective point on Euro when I show you guys what my chart looked like on the 4-hour on the next slide. But this is the weekly external range liquidity pool that I'll eventually be targeting. But GBP was the weaker asset, and this is going to be the target for GBPUSD. And I'm assuming with this getting taken out, we will get to at least this daily flat bottom low, which will then show you on where I had my execution on the 4-hour chart, because I was referencing a weekly key level to a 4-hour market maker sell model. So that was my first thing that I saw that was very clear to me. I want lower prices on majors and I want higher prices on the dollar index. Now getting into my entry and what I was taking, this is just the forever model and what we look for. We're looking for 1, price to reach an internal range liquidity pool. Then 2, SMT diversions inside of that internal range liquidity pool. Then after we have step 1 and 2 checked off, what do we do next? We simply just go to our aligned time frame and frame a market maker sell model. We just shoot for our entries at the high probability order block, put our stop loss at the high, and take profit at a 1 to 2. And that is exactly what I did. I did that today with our Discord. I entered off of this order block, put my stop loss at the wick, and then I just targeted a 1 to 2, which is actually aligned with that daily flat bottom low. At 107,118, that gives me my 1 to 2. And I will be completely content with taking profit and the full position off here because I don't want to hold my position past NFP, because that is one of the bigger high volatility red folder news events that happen during the month. So I'm completely fine with just closing the position there, even though it will run to potentially that external range liquidity pool. And if we reach this low, then what I'm assuming is that GU will take out that external range low as well. But I called this out today, given the alert of my entry, my stop loss, and my exit, saying that it would be worth a 0.5% risk since it is a Monday trade. So that is exactly what we were looking for. People saw the forever model print out, the internal to external range move that we saw, and we labeled it on Sunday. This was the execution. My stops are break even. It is a risk-free trade. There is Euro news at 5 a.m. on the Tuesday. So just understand that I'm just sitting this trade completely risk-free. There's nothing really for me to worry about at all. So that's the position, that is the analysis, and how I framed my weekly narrative, that if price does this, then I will do this. And that's going to be how you excel in this game. You're going to need to make a plan, and then all you need to do is execute based off of that plan. That's exactly what I did. And that's also how you collect data. That's exactly how you build confidence in your entry model. You're just looking for the same things to repeat themselves over and over and over again. And that is how you'll have literally no motions attached to wins or losses. Remember that this is all business, and that's how you'll excel in the game. Trust me when I say this. But I hope you guys enjoyed this video. I hope you learned something and you could take something away from it. And if you are interested in the Discord, or I'll leave a link in the description. But like always, take it easy. Good luck, good trading. And I will catch you guys next week in the next upload.